You created this 365-day like stock RSI over a 30-day net change of illiquid supply. That is like an alphabet soup of things to say. Explain what this metric is, and then it looks like right now it's starting to show us some pretty interesting things, especially when you compare it to what it's shown us over the past.
Yeah, for sure. The name is definitely a mouthful. Like some of the stuff just sounds like really complex. It's really not. What this basically is a way to kind of track the underlying supply shock in the market. Because in my opinion, that's what drives Bitcoin up to have these big price rallies. You have this wave of supply shock, and then the speculators come in and ride that wave up and take the reins of it and push it up further on the speculative premium. And so like when you go back and look at Bitcoin's history, I also threw in the newsletter we did this week an example from the 2017, 2018, that time frame. And what you see is kind of at the beginning of the bull market. Well, I should start here. In the bear market, you had a capitulation event, and then going into the bull market, you have the supply shock. I like to think of it as a supply squeeze, kind of just because it sounds cooler. But that's what really propels us into that main phase of the bull market, and then on the back end of that, you see supply becomes liquid again. And so for anybody who's not familiar, basically when I'm saying a liquid or a liquid, the way you can think of this is like the coins moving to like entities on the blockchain that have a very low or high spending behavior. So liquid and Glassnode also has something called highly liquid, which is like a way to look at it even further, have like extremely high spending behavior. So these coins are in and out all day. These are speculative traders, right? Then you have liquid coins, which are in and out a fair amount. And then you have illiquid. And a liquid are the way I like to think of it as the strong hands, right? These are the people that take in a lot of coins, never really sell them. These are the long-term investors that are kind of the concrete foundation of Bitcoin. So, kind of analyzing their behavior, I think has a lot of signal to it. And, these are these indications that you get from this metric aren't, you don't get them often, but when they do come, they have a very high reliability. And so what we have now is, we had this big capitulation event in the end of May. A bunch of coins became liquid that were previously registered as strong hands. And so what you've had since then is just this really strong reaccumulation. And so like in this broader context, we've actually reached what I've used for this metric as a buy signal, where we fully made the rounds from a full capitulation below this RSI, and now we're back above it. So to me, just seeing not only that we're in a buy signal, but the rate of change from that sell, from that capitulation to this new buy signal that's just flashed is really quite incredible. Going back in Bitcoin's history, we haven't really seen anything like this aggressive per se. Like we've absolutely, obviously, like I said, we see these supply shocks every bull run, but nothing on this scale of in terms of momentum. Even looking back to last year, which was it's still a really strong wave, but yeah, this has pretty much just been vertical accumulation since May.
And so when you look at things like exchange balances, it looks like, again, people are buying Bitcoin on the exchanges and they're just taking them off almost as fast as they possibly can. Is that accurate?
Yeah. So the exchange flows are something that I think a lot of people are familiar with now. The way that the premise here is that, when coins are being moved onto exchanges, they're being sold. When they're being moved off exchanges, they're going into some kind of like custodial service or cold storage, not, to be held. And so this is something that, a lot of analysts have been following for the early mid part of this bull run up until kind of mid-April. You just had coins just getting ripped off of the exchanges. And so, in mid-April, all of a sudden you had like, between then and March, I'm sorry, and May 19th, you had like 145,000 coins that came onto exchanges. And so, that was obviously highly bearish because you had a lot of people moving those coins onto exchanges to be sold. So that was like kind of an indication that, we were going to need this kind of prolonged reaccumulation phase because a lot of coins had been sold. But since then, since May 19th, we've kind of just been, grinding sideways bearish. Well, I shouldn't say sideways bearish, sideways down, which is actually bullish for this indicator because it's saying the exchange balances are going down. But this week we've got this really large down draw. And anybody who is on Twitter, by the way, might have seen yesterday that there were these huge reported outflows. And I left that data out. This data is only going up to Thursday. Only up to Wednesday. I left the Thursday data out just because some of those transfers were internal. It just hasn't been picked up by Glassnode's heuristics yet. So I just wanted to just be on the safe side and just leave that data out. But even excluding that, which is showing like a ridiculous signature on the chart, that's why I just left it out because there's no way that's true. It has to partially be internal. We're still seeing really strong accumulation in terms of the exchange flows as well.